Good morning. This is George Kachuk with RCM Wealth Advisors, reporting to you from the CME Group trading floor in Chicago. Well, here we are, second week in September, and today equity markets still continue to perform, meaning the equity markets are still in an uptrend. Yes, markets are digesting a little bit of the move, the big move they had in August, so moving sideways. But still, everything looks very positive. We see very little evidence of any professional selling in the equity markets. So right now we have the NASDAQ still flirting with that 4,600 level. It's a round number, psychological. Having trouble closing above that, but it's just right below there. So basically I'd consider this uptrend intact unless the NASDAQ were to break down anywhere between the 4,500 to the 4,460 area. Now the S&P is right above that 2,000 level, another psychological level, round number. And pretty much as long as it doesn't break down below the 1970 level, pretty much say the uptrend's still intact. The Dow's still trying to make a new closing high, which would be above 17,156, somewhere around those levels. So it's also flirting with those highs. The Dow transports are at new highs. So basically, U.S. equity markets are acting very well. Now, we see the same thing going around the world. The Eurozone indexes did get hit pretty hard on all the Ukraine-Russia news a few weeks back, but actually they're rebounding pretty nicely. And also we're seeing the emerging markets starting to do very well, mostly led by all the Chinese indexes. I'm talking about whether you look at the Hong Kong Hang Seng Index, where you look at the China shares, iShares, the FXI, or if you look at the Shanghai Index. All those are moving into new highs. Now, the reason this is going on too is it's not all QE. Actually, if we look last week, we got manufacturing data from around the world, and it pretty much still showed expansion. Now, Chinese maybe came in a little bit softer, but still, if you look at the manufacturing and the services index, it was still above 50, right around 51 area, still showing expansion. The Eurozone area also was above 50, and that 51 area still showing expansion. And the U.S. markets, we had the ISM manufacturing and the ISM service indexes come in last week at 50, a very robust 59. So pretty much there is a global expansion going on. Now, with that theme in mind, we're going to talk about one of the stocks we're looking at and we're picking up right here, right now. So in the U.S., the hot sectors are still the internet sectors, medical sector, transportation sector. So one of the stocks we're looking at is Baidu. It's a Chinese search engine company. That symbol is BIDU. Maybe timely to look at this company since the Chinese markets are doing well and the internet sector is doing very well in the U.S. Now, Baidu basically has a 3-year average EPS growth rate of about 34%. Its 3-year sales growth rate is about 55%. Has a return on equity of about 34%. And last quarter, earnings came in at a stunning 36%, and its sales came in at 57% increase. Now, here's why we like it. Basically, Baidu's been consolidating for the whole year below the $200 level from about January to July. And in July, it had a pop, ran up to the 229 area, and formed another base, basically consolidating over the last 5-6 weeks. Now, last week, we started to see a lot of accumulation off that 222 pivot area, moving higher, and also another pivot area could be the 229 area. So basically, we're picking up shares right in that area, and we'd be buying them probably up to 235. I wouldn't chase it past that if it were to continue going that way. Now, on the downside, it has support right at about the 210 area. If it dropped below here, it might drop further into the 190 to 200 area. So pretty much look to set your stops somewhere along that area. You need to position size accordingly because the stock could be volatile. September's a volatile month, so just be aware of that. And of course, consult your financial advisor if indeed this trade is for you. But also one of the reasons I want to mention that we do like Baidu is it basically has about 70% of market share of the internet search engine in China. Its mobile growth is starting to really grow. Last year, mobile growth came in 30%, which was 10% over the year before. So things are going well for Baidu. The chart's timely. It's breaking out right now at these levels, anywhere between 222, 229. But as always, that price and volume be your guide. Watch your stops, and good luck trading. And again, this is George Kachuk, or RCM Wealth Advisors, reporting to you from the CME Group trading floor in Chicago.